The management that is in focus currently is Quess Corp. Remember, the company reported a slightly muted Q1 set of numbers. Revenues as well as growth came in muted compared to what the street was anticipating. To discuss this and more, as well as the way forward, we are joined by Guruprasad Srinivasan, ED and CEO, along with Sushanth Pai, who is the CFO at Quess Corp. Thank you so much, gentlemen, for joining us. First up, Mr. Srinivasan, what we want to ask from you is, as far as headcount addition is concerned, on a year-on-year basis, it's actually dipped almost 7%. Sequentially, there's been a slight uptick of close to 0.5%. Now, keeping in mind or taking into context the kind of layoffs that we have seen at TCS, now how exactly are you looking at the operating environment, especially headcount addition?
Sure. So first of all, thank you so much for having us. And the quarter has really begun as well in terms of our EBITDA has been up by 10% year on year, and specific to headcount, we closed at 462,000 headcount. Now for Q1, when we started the quarter, while the April and May was little muted specifically for general staffing, and June we have seen substantial recovery. So June alone we had a net add of about 6,500, and as we moving into Q2, we are now seeing almost about 42,000 open mandates that has come back on back of the festive season just opening up in the country. The hiring is slowly coming in. So we are seeing a recovery for general staffing. The second part of the question that you specifically asked was related to the professional staffing. So with regard to the professional staffing, we have grown almost about 31% year on year by revenue and about 48% year on year in terms of EBITDA. And our margins, our EBITDA margins has just crossed about double digit. We are about 10.2%. Despite of IT services companies are not hiring, majority of our demand is coming in from GCCs and the non-IT, non-technology companies who are hiring big time in that space. And GCCs are really hiring well, and high-end niche talent that they are hiring, and we are able to actively deliver for them.
Okay, take that point. Mr. Pai, let me come to you. Sequentially and YY revenue growth has been a little muted this time, right? You have spoken about achieving a double-digit growth in FY26. Are you on track to achieve that growth number? What will the margin number look like? And what will be the growth drivers for you?
Yeah, thank you, and good afternoon, everyone. So clearly, when we started the year, we had a clear plan and laid out a path for improved profitability. And there were two action points there. One was improve operational efficiency, and second, higher margin business should contribute to higher EBITDA margins. So I'm happy to state that on both counts, I think we have shown results, and Q1 has yielded that. So if you see broadly, our EBITDA was about 70 crores, has grown 10% year on year, which is again faster than the revenue growth. So that's one thing. Second, on a margin basis as well, 1.8% has become 1.9%. And that's the trajectory that we wanted to achieve. And the second part of the margin improvement was profile mix. And clearly, as you can see, the professional staffing business, which was contributing to EBITDA, which was at the end of FY25, was only 23%, has now contributed to 29% to the EBITDA. So clearly the profile mix, operational efficiency has started yielding results. As we go along, we want to continue this path, which means we want to show that margins will accelerate higher than revenue growth. And therefore, that's the path we want to continue for the full year. Yes, revenue has been muted in Q1. And like Guru just explained, we are just getting into the festive season. So we are seeing good traction in revenue growth as well as we get into Q2.
Can you quantify, the targeted margin trajectory, at the end of FY26, where do you see margins, especially post-demerger? Investors are still, investors want clarity as to how exactly the margin trajectory will move forward for this particular entity.
Yeah. So like I told you, our margins at the end of FY25 were approximately about 1.8% at an overall level. And we want to slowly take it to about 2%. That's the direction that we gave investors, and we are on that path. One quarter has happened and we are at 1.9. And like I told you, that even professional staffing margins has improved from about 9% last quarter to about 10%, which is in the double-digit trajectory. So the path is slowly take it to an exit of about 2% at the end of FY26.
Mr. Srinivasan, a couple of questions. Number one, especially in the BFSI telecom space, how has hiring panned out? The second question is, especially in the IT, is IT hiring slowed down significantly? And is that being offset by GCC hiring? And thirdly, how is overseas hiring, especially Singapore, Philippines, how is that particular segment panning out? Keep it a little short, sir.
Let me go in a sequence. So BFSI for Q4, Q3 and Q4 was definitely slow with regard to the general staffing. We are now seeing slowly mandate coming in for Q2. So that's specifically for BFSI. And moving on to specific to technology segment, see, largely our hiring are coming from GCC, and within GCC, we work with various verticals. So again, the high skill demand, which is coming specifically for AI, cloud, and high tech technology plus media and electronics. So these are the spaces where specifically where we are getting the mandate demand in from. And moving on to the international piece that you asked for. Singapore is still muted. We are not seeing much of, the borders are still sealed for expats to come in. And but Singapore is offsetting for us with Malaysia and Philippines doing well, specifically for ITES businesses in these two geographies are doing well. That should cover up our Singapore slowness. So in nutshell, this year we'll have growth coming in from international business as well.
Thank you so much, Mr. Srinivasan and Mr. Pai, for joining us. Wish you all the best for the rest of FY26 and hope to see you soon at the mid between the two results as well. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.